Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday, we have Shawn, Cruz, Manager of Trader Services at TD Ameritrade, to discuss Nasdaq 100 levels to watch as stocks grapple with the future impact of COVID-19 vaccinations and also contending with lockdowns without a stimulus deal. So Shawn, we have a lot to unpack here. What are you looking at in the index?
Yeah, so one thing I'm looking at is sort of the shift in what we've seen this week on the back of the Moderna announcement versus what we saw from the Pfizer announcement. We initially saw a pretty sharp reversal in the stay-at-home names, really selling off, and the cyclical names doing incredibly well. We didn't really see that this week, and I think it's because investors had more time to really reassess what a reopening, whenever that does happen, would mean, and that a lot of these tech companies are not going anywhere even once we reopen. So I don't think you're quite seeing that reaction this week that we did last week. And if you're looking at vol-Q, which we use to sort of measure uncertainty or fear around some of the names in the Nasdaq 100, that's continued to sort of melt off as we've gone through the end of last week and into this week, which shows that there really isn't too much fear on the horizon. And it looks like the path of least resistance, at least for the time being, appears to be more moves to the upside, although those may come with some bumps in the road like we're seeing today.
Interesting. Amazon announcing it's getting into the pharmacy business. If we recall, it acquired PillPack back in 2018, but still those other pharmacy companies are really taking it on the chin today.
I think so. I think this really seems to be more of a, what you expect when Amazon moves into really any space, and that is if nothing else, and maybe not a fear of a massive shift in market share, but at least a little bit of a concern around what that will do to pressure profit margins, because that is one thing that we do see when Amazon moves in. It's not always sure exactly how it'll play out. When they move into a space, look at the meal kit space, that ended up not taking hold quite as bit as maybe some had initially feared. But generally speaking, you should err on the side that when Amazon does come into the space, they are going to have at least some degree of success, and if nothing else, it'll pressure margins. But this certainly appears to be more of a risk or a threat to the incumbents in this space, at least for the time being. Amazon not making a major rally. I think a lot of investors and analysts are going to wait and see sort of what kind of traction they can get as they move into this space, and also what sort of expense that will come along with if they have to build out additional infrastructure to be able to service that space as well.
And finally, Tesla is moving into the S&P 500. Why is S&P adding it now?
It's always interesting, there's the requirements to be included in the S&P 500, but there's really no official date where they say, okay, hey, September 3rd, we're going to make some announcements on who's coming in and maybe who isn't going to be coming in. There was a lot of speculation last time that Tesla was going to be in after they switched to being consistently being profitable. I think the disappointment we saw in September it kind of shows that there was a lot of investors who were hoping that was going to happen then. It came now, but the thing is, you can never really know exactly when they're going to announce that. There's a little bit of this assumption of past their most recent quarterly filing, when that will come, if they do all of a sudden, and something in that filing now makes them eligible. And that's usually around 30 days, 20 to 30 days post-filing. Didn't happen last time, but you notice that's when there was really that speculation that that announcement was going to be imminent, was about 30 days or so past their second quarter filing. So now we're about 20 days out or so, 20 or 30 days out from their most recent filing, and that is when you're getting this announcement. So the next thing to watch will be, one, are they going to do it all in one swift move? Because Tesla is a massive company. It's going to have a very large weighting relative to some of the other names in there. So are they going to do it all at once, or they add them in, or are they going to tranche it out, maybe split it up into two separate tranches of adding them to the index? And the other interesting question is going to be who gets removed. And the effective date for Tesla being added in is December 21st. They usually announce who's going to be removed from the index, because you got to make room for Tesla in there somewhere, usually in the days leading up to the effective date. So mid-December, you may want to start looking out and seeing who's going to get removed. Think about, we've had GE removed, we've had ExxonMobil get removed from the Dow. So it's going to be, I think, one of those industries that's probably been under pressure this year that maybe be on the chopping block, and I'd expect some speculation around that to start building as we get closer to that date.
Yeah, that'll be super interesting to watch. Shawn, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.